Good morning, guys. What's going on? Looks like me being out for a day lends to people not showing up the next day. Who would have figured? Not gonna wait for everyone else to roll in. They'll be in at 9:30. They'll be in for. They want their questions answered. They want to see. They want to feel. Let's I'm just. This is gonna be one of those. I'm just gonna start talking about things they can figure it out later if they want to hear what I have to say. Uh, let's let's roll back to yesterday. So yesterday we got our big capital gains in tax news, right? Now it's it's sort of funny. It is funny in a way that we saw some reaction. Now, of course, you're going to see a reaction, right? Of course, you're going to see a reaction. But the thing to note here that I found funny, and again, obviously, I was here. I was just we'll get to it. We'll get to it. But so we knew before the election. We knew before the election what exactly Biden's plan was for taxes, right? And we actually knew the numbers. If you go back and you can Google it right now. I mean, I could Google it right now. Uh, if you go back, Goldman Sachs even put out a little piece talking about this was right before the election, talking about how Biden would double the capital gains tax and what the number would be, which is the exact number that Bloomberg came out with yesterday. The exact same, that whole article that came out is the exact same numbers that we already knew before the election, right? And that would be the doubling up to this 43% level, basically, plus the Obamacare, three and a half, whatever percent it is, right? And so we already knew, right? We already knew these numbers before the election. I want you, okay, here's the important part, and this is where, I know a lot of you wanted to hear what I had to say, and so here it is, right? So this is before the election. What was going on before the election? Let's talk about it a little bit again, because it's so important to, before we just come to a conclusion, we need to know what was happening before, right? So let's just set the stage a bit. Let's set the stage. Okay, we come out of COVID bottom. We have a massive growth rally, right? Growth is insane. Growth is going and going. Okay, September. What's going on around this time? Okay, around this time, we're 1 month out from, or 2 months out from the election, right? What starts to happen in September? Well, we start this. We basically start this. What we can call a correction, really just a consolidation. What's the consolidation made of? Hedging for going into a very volatile election, the most expensive election ever in terms of volatility. So we're hedging for an election. What is the other thing that's occurring in here? This is where the blue wave bet starts. What's the blue wave bet? That we're going to have a sweep by Democrats from Congress to the presidency. And what does that set up? That setup's one, what we have now is this idea of higher taxes, right? And capital gains. And then two is this idea of clean energy and social programs. And coupled with that, an insane amount of spending, because we knew that Democrats going into this election were willing to pull the trigger on everything. And not that Republicans technically aren't, but they do the phony thing where they talk about, oh, the budget. What about the budget? And, we know how that works, right? And they did a $1.2 trillion tax cut themselves. So, anyway, the stage is set. We are hedging for the election, and we're doing a blue wave bet on Biden and Congress, right? What was the blue wave bet made of? Why did we transition from tech, right, in these very heavy growth tickers, momentum, right? It was momentum was it. It was all momentum. What happened in this time? This is where value, that big dirty V word you love, right? That's where the WAP came from. Value. We turn into value because value, it doesn't grow, but what it does do is it takes in that money that's being spent immediately. Industry, anything on the industrial side is going to be money spent and funded from the government. That's basically a large part. And we have a bill coming up right now for big infrastructure, right? And so this is where value starts to get pushed in. So we're taking a flow from growth and putting it into value, right, during this whole time. And yeah, on the average, it looks a little funky. We come to the election, right? We pull back into the election. Again, this is the most amount of hedging that's going on, and then Biden wins, and we absolutely explode from here. This is where growth comes out of its low, but value itself really. This is where the small cap really just gets going, right? And everyone gets confirmation, and we just fucking get going, right? Okay. Is this here before the end of the year not take profit for taxes? We talked about it a little bit. The answer is yes and no. And you can say that some of it is going into the end of the year right before the election is taking profit for taxes. Okay. The thing to remember here, and the reason why it doesn't matter that much, but we can still attribute some of it. We're talking about 0.3%. And we're talking about people, not corporations, first of all. People. 0.3% of people make enough money to have to be in this capital gains tax area. 0.3%. I'm not part of this 0.3% of people. I had a very lucky year last year, and if that was going on, that it would have attributed to me last year, but I won't do a year like I did this year. And not even with, we'll get into the Bitcoin thing in a second, but we're talking about 0.3% of people. If you look at the number, it's just over 300 billion in the next decade, right? It's really a very small amount of people. Okay, what are these people going to do with that fucking money? It's money they don't need to spend, obviously, right? They don't do anything with it. And if you go look, I typed into chat, you can see the picture. It's got all the things on there. Red lines are hikes, green lines are cuts. Nothing happens, guys. Nothing happens. Why? Why does nothing happen? Because there's nothing to do with the money. If you go and look, and I looked in 2013. 2013 is the last time that we had a hike. Do you know what happened in 2013? The quarter before the hike, there was 1%. 1% was taking profit. 1% of all assets were taking profit in 2013 before the hike. Do you know how much spending happened immediately after the hike? An extra 4%. So you minused 1% immediately before the hike happened, and then immediately after, you had a 4% gain. So from quarter to quarter, it was a plus 3% gain in terms of how much assets they put on into their portfolios. So basically, it was actually a net gain. And if you look at the market and overall, obviously the market's been going up for fucking ever. So it's kind of hard to look at this in a very critical way. But at the end of the day, there's actually no time when it's actually negatively affected it. Because what are people going to do? And this is where what really gets interesting here is that growth just went through a correction. Growth already went through a correction. If growth didn't go through a correction, then it would actually probably have an effect here in a way that you're going to want to do it this year. But do you know when it would happen? It wouldn't happen right now. It would happen at the end of the year. So it would need to happen at the end of the year. And so it still can happen at the end of the year. But the thing is that growth already went through this correction here. And so if you think about it, we went through this phase here where we transitioned into value, right? We transitioned into value. That was already a start of going into something that is planning for this new, the new Democrat style and extra spending, right? And taxes involved. We already knew this back here. We already started it. And then again, we did it again. Over here, we consolidated all of our growth. We trimmed the hedges. I talked about it 2 days ago. And through that whole week here, we're trimming the hedges here, taking off some of the shit that we have, right? Some of this growth that we have that's not good. It's very risky. And it went into value. It did. It went all into value. And it's going to continue here because of this infinite spending, infinite QE, everything, right? This is where there's no reason to take money out of the stock market. The funniest part is that there's no reason to take money out. People aren't going to do it. If you think about how much more you have to pay on taxes, taking all your money out and then what are you going to do with it? Just sit on it is actually a net loss compared to just paying the extra tax. It's not going to happen, guys. And again, it doesn't affect any of you, and it doesn't really affect me either. It's not going to affect any of us. It only affects you if you make over $1 million. That's it. No one here has to, and that's, guys, that's from profit. $1 million in profit, right? Profit, not not like how much you gain profit. That no one here has the problem. $1 million profit, that's not gonna happen. Okay, so what did we get here? We got basically algos reacting to news. It's not gonna be the timing, the way it works based on historical context. It'll be basically at the end of the year. Basically at the end of the year, that's when it will matter, and we'll see. Again, what I would say though is that we sort of funnily enough is that we already sort of made the moves for it. Uh, Purposely or not, we already made the moves because we transitioned into the things that won't be affected, which is value. You don't get affected on that side of things. Okay, that's it. Capital gains. It's something that affects the market in a way that you can't see overall. Maybe you can see it in like your intraday candles here because of some news, but that's it. There's not an overall average or anything like that. We can see it through history, and so that's it. Okay, Bitcoin. Well, this is a different story, and I'm going to talk a little. I'm going to sort of try to. Oops. I'm going to try to explain this the best way that I can. So let me see. What time? Okay, at 4:13 yesterday. 4:13 yesterday. That's when I was out. We were at about, we were in the ditches. It was about 54. It was about 54,000 or so. This is obviously like 12 hours before the news and stuff. Okay, what was happening around this time? So we had already, obviously, we had some selling start. Just because we were at the high, everything was okay. I mean, we came off this low, things were fine. I didn't really care. Obviously, I was still going through the motion. Don't care. Bitcoin's on a path here. No news was coming out in terms of Bitcoin. Again, it was just some selling. This is the Coinbase IPO, and then this is Saturday. We had volatility over the weekend. We expected some volatility over that weekend, right? That you would basically be selling the news a little bit, and we'll see what happens thereafter. Okay, so come into basically yesterday morning. So that night, this is going to be an interest. I have to set it up because it's interesting the way it kind of happened to me. Is that day, I started dicking around with Ethereum, right? Doing this whole thing with Zedrun thing. So with Ethereum, and I was doing it, and I was basically trying to get as much money over there in a short amount of time as possible. But I had to keep doing it in different chunks from different wallets I had. And I'm like, Jesus, these fucking prices are ridiculous. It's like $50 for a gas fee every time. And so then I finally figured out how to just do like a $5,000 thing. I did it. I played around with it a little while. And so this whole crypto thing, I'm basically trying to figure out that day, right? So before I sell Bitcoin, so I'm figuring out this whole crypto thing. And I'm like, okay, so we have all the other cryptos. We have all these other like NBA Top Shot things. But those are all basically, you buy something and you're basically hoping someone else is going to pay more for it later, right? We were talking about Greater Fool that day, right? So it's already in my mind, Greater Fool. And then I see the Zedrun thing and I'm like, okay, this is basically the Greater Fool theory. You're buying something in an NFT and you're hoping that someone else is going to pay more for it, tomorrow. But there's an added factor of strategy in gambling, right? And I'm like, okay, let me do the numbers. So basically for 12 hours, I did the numbers, solved the damn thing, right? And figured out that you technically can't make money doing the Zedrun thing. You can't make money from races. You can't make money from breeding. You make money just from someone else paying more for your fucking shit. And so at that point, I was like, okay, I can just buy any crypto NFT thing. So I'm not going to do this one because it would require more work to begin with just to even do it. So I took all the money out. So I paid the money to get in, then I take the money out, and I'm like, okay. And through that process of sort of trying to figure things out and do these things, and I was interested. I thought it was really cool in doing these things. Through some of the interactions and through what I was sort of reading and understanding and the way the process works and how difficult the process is and how convoluted it is, what I was realizing is that this is a bad waste of my time and energy, and a bad waste of my money in this moment for doing these things. And I was realizing that my situation is I can kind of just waste my own time and money because I have the resources to do so. But there's a factor here of basically this market in the crypto space has only recently turned over to an institutional factor. Most of it is still just normal people, and a lot of it is inflation. And I've talked about how I believe that all inflation is actually that we see, and the reason why our inflation is so low is because it's all on the crypto side. $2 trillion, or the 2 trillion cap is fucking massive, and that's normal people. And we don't. There's no way that there's $2 trillion out there of normal everyday people's money. There's not. And so it's inflated, right? We know it's inflated. We know that Bitcoin's at it was up in the 60,000s. It's inflated. It's hyperinflation, right? And so what I realize is that what we're basically doing is we're not, I've talked about this in the past of generating wealth, right? How do you create wealth? You take a lower valued asset and turn it into a higher value asset. Have we with crypto, if we just look at that specifically and we know there's inflation, you remove the inflation idea or just keep it constant, have we increased the value of anything? We haven't. We haven't taken something of a low value and turned it into a higher value. What we've done is we've made it more complicated, and we've created new sort of tertiary markets from this idea with NFTs and all these things. What they do is they generate fees. The whole thing is about fees. It's about getting people to do things with what we already have that creates a little bit more demand and incentive, and it's a little bit fun, and it's intriguing, and you want to go get involved, and you you spend a lot of money doing it, and it causes this whole thing to continue to go. Because as I'm spending money on this thing, it's causing Ethereum prices to go up as well. I'm spending a bunch of money and creating demand in something that has limited supply. And so for every one supply, every single one of these NFTs are basically creating an artificial demand through all these different things, through these games that we play with this Zed Run thing with NFTs. It's basically taking the Ethereum supply and fucking creating artificial demand out of all these different things. And so what's happening is this almost instantaneous inflation event, this hyperinflation from all of these different areas. And it's money that people don't have. That's what I realized in that moment, that when I was doing this thing, I was like, how do fucking people afford this stuff? There's no way. Because I was already like, I don't really give a fuck. But this is insane to me. And really, this is the whole crypto thing, it's people, we went from being in such a bad place to people having hope. It's like buying lottery tickets where, it makes you feel good and you have hope that you might be able to make money. And we've seen people actually make money, and you've got all this, things, but it's obviously a little insane, and we know that, and it would be crazy not to be involved, right? Like Dogecoin, whatever going up is fun. It would be crazy not to ride this whole thing. Why did I sell my Bitcoin? So I'm going through this. I don't want to be a part of this NFT thing. I'm like, okay, I don't want to do this NFT thing because I think there's actually something just wrong with it that for me, I'm not going to do it. I'm not going to waste my time and energy and money on it because I feel like there's something there that I don't want to be part of. Okay, Bitcoin. I believe in the stock to flow model. I think it's going to go 100,000. Okay, what's my problem with Bitcoin right here? So with the same idea, I think there's hyperinflation, right? That's fine. I'll write it. What started to happen that morning? Well, I'm looking at Twitter, so I'm already feeling a little funky. I'm in a weird mood, right, from this whole thing. And I'm reading Twitter, and there's arguments going on from Kathy Wood, Elon, and Jack from Twitter. They're talking about how Bitcoin is good for the environment. And I'm reading this, and I read it like unbiasedly, since I like these people. And I'm like, why the fuck are these three people online right now trying to convince the world that Bitcoin is good for the environment. And so I'm reading that was that day, right? That day that I started dicking around with these things and then I did all this. And I'm reading this and I'm going, what the fuck is going on that we have these people are trying to convince everyone right now that Bitcoin's good for the environment. Now, we've on stream, we've read the thing before that has proven that, it's not as bad as we thought. At the end of the day, it's not generating as much pollution as we thought it was. But the idea that it's somehow it's the cause, Bitcoin is the cause for clean energy is fucking stupid, right? It's actually stupid. And so what would cause these people to all of a sudden just randomly jump on this guy at a random jump on this idea at a random time, right? It's completely random time. There's no reason to have all of these people all at the same time. And so I start to read it and I'm looking and I'm like, okay, it doesn't have anything to do with the dip here. They don't need people to buy it. It's not anything to do there. And so I'm reading and I'm reading. And I start to go from the feeling that I have of what I was just doing with Ethereum and how it's generating this very strange sort of mood with myself, and from what I see, and how are we even keeping the demand up for these things and keeping prices up. And then I'm looking at Bitcoin and seeing how we have this fake shit coming out right now and how there's just like this influx. I came to the conclusion that we must be at some sort of inflection point if this is all fucking splashing me in the face at this one point where I'm getting convinced to do a bunch of these different things at this one day for no fucking reason, right? There was like something in my intuition that was like, this is an inflection point. There's something going on here today. And so I'm like, okay, if I sell all my Bitcoin right now, it doesn't change anything because I can just get back in tomorrow if I wanted to anyway, right? It's not like options where I have a worse average now. No, if I just take all my profit and enter the same amount, I'm back to break even. And if it goes from here to 100,000, I'd make the same as if I went from my 9,200 average to 100,000. It would be the same average. What I do get to gain here is that if price goes down, then I'm saving myself in whatever the risk is. About 5 hours later, Bitcoin goes down another 5,000, right? We're at minus 50,000 right now. And we get idea of an 80% tax on Bitcoin. The whole Biden thing comes out and everything. Basically, whatever's going on right now, a lot of people are thinking the same thing, and everyone's feeling a certain mood. And again, I'm not an emotional, moody person, but if my intuition's going off that something's just not right here, and that I'm reading things that I know are not true, and that there's a lot of weird things going on, then I'm not going to be a part of it, right? And I think other people don't want to be a part of something that also feels like that. And again, you guys know me. I'm just a machine. I jump into the market. I do my thing. I work within the area that I'm good at, right? I don't do things that I'm not good at, which I've talked about as fundamental things. None of us here can run a company. I can't run a company. I don't mean that in that sense as much as like, we don't really understand these things and we don't have the information to understand them. So we're not going to dive into that space, but I would say I'm pretty good at this. If there's a warning in the market or something doesn't feel right, I've always been very good at getting an intuition for that, right? Even if I'm impaired, right? I was fucking hammered one day, it's September 2nd, and then I jump out of the market when I had 100% in on short-term calls, and I exited the market, and then I basically dodged a minus 4% bullet. So those sort of things I've been pretty good at. I would say that jumping out from here, obviously I didn't get out up here or something because nothing really screamed to get out, but I would say getting out here and whatever is happening right now and whatever may happen this weekend and what we've seen on the other cryptos now where they weren't moving down and now they're moving down. And now we have this whole thing that came out with taxes. It's not like someone told me that we were getting this shit. No one knew other than we already knew the capital gains on, everything else was going to come out. But you know, if I can sell before something like that comes out, then I would say there's more at play, right? There's more at play than just guessing before news comes out, right? So keep that in mind for the Bitcoin thing. And for crypto, again, it's more of a I'm 100% in on crypto and Bitcoin, right? I love the concept of it and the idea, but it doesn't really matter what I think. It's more of the market, and what I think is that it's a bunch of fucking normies that have caused hyperinflation in something, and that it's not actually $2 trillion. It's only $2 trillion because people haven't sold it, right? It's not actually $2 trillion because institutions only just started. And they're very good on game theory to cause things and say, oh, it's worth a lot. And I don't, I don't think so. I don't know where we started to think that was. It went from small game to big game real fucking quick, didn't it? So let's see how things go. Now, equity market's been fucking great, right? These 2 days, besides obviously some volatility yesterday, the day before obviously was, you know, pretty nice, And yesterday, even from the open, right? Even though we, we have some volatility that came in. I mean, it was still very strong. I think the thing to note there was that where we get rejected and when that selling started was at our resistance, which keeps me in line, right? We had things happen in actual resistances. Obviously, we're getting fucking paid on Snap right now. We're actually doing really well on equities. So, um, if anyone's wondering, a part of the Bitcoin thing is also I'm more confident that I can make money out of that money than just letting it sit in Bitcoin, right? From 50 to 100 would be another 500%, and that's a lot. But I still am more confident that I can avoid risks with my strategy with equities than if I think there's an inherent risk right now with Bitcoin. And so that's also, and obviously the price was going down anyway. So keeping that in mind, right? That's some downside risk. My biggest thing has always been to protect my downside risk. It's never been about getting the flashiest gains. It's always been about protecting downside risk and never blowing up and never losing, and not even there's a point at which these things come in and it's like, okay, no, I'm not going to lose more money on that. I'm going to take that money, be fucking happy, don't be stressed, right, and feel good about it. So also just in that factor, not watching money burn for no reason, and feeling that if I play to my strengths, right, I may not make as much money, but I'm going to play to my strengths so that I'm not going to lose money overall. I would say that's probably the best. UMC continuing, that's great as well. Right above the 1007, which is very strong. This semi market has been so interesting. So interesting. When we look at the average, here's the average, right? NVIDIA just chilling. UMC definitely a nice play. Here's like the if there's something you're good at, right? Then stick with that. Stick with it. Very nice move with UMC again. We had the double bottom idea with with semis. We were playing UMC. I talked a lot about this action here, which was difficult. And then 2 days ago, I know I didn't post those charts. If you guys want any of those charts from the 21st charts, just let me know and I'll throw them in there. This is the UMC one, right, with the bottom wedge. We had a few bottom wedges, and then this kind of action is very straightforward. Obviously, we had already been getting involved back over here, and so this is kind of a straightforward play. If you were trying to catch it from yesterday, I'm guessing somebody in here probably bought it after I posted posted it on the thing, and I wasn't here. Guessing somebody got it yesterday on that. Yeah, there's no way you would have caught it here. Yeah, Snap. It's again even like this idea here. I mean, what can you do? No, it's WKS. Some of these again. This is when we look across when you look through some of the what we have at the bid to start here. Let's see. It's you could basically sum it all up to everything that we've said, which was that this entire idea here was this is on a one trend. We're going one way, right? And again, I mean, I just fucking told you guys I don't think capital gains have anything to do with the market right this moment. So we'll see if that affects anything. But again, from if we just remove that news and we think about where we are, there has been no change anyway. Even if we just sum this up, remove this, and maybe remove the volatility from it. If you just sum up to where we are, right, we're still on the trend and everything else, right? Again, we lost time, we didn't lose value, and at the end of the day, that's the same trend. If we recapture it very quickly, right? If you even think about the bid of what we had yesterday, we were already on the trend. If we get back there, it's Friday. It definitely sets up an interesting sort of Friday. If we just keep the bias and keep the rhetoric up that we've had, you're still not losing from that idea, right? This whole long-term idea that we've had over the last couple of weeks here, then you're doing very well, right? You definitely did well yesterday. Think about it. If you've been in just long terms, then this affected you zero. You didn't get any effect yesterday because you're right back to where you were anyway, and you're still above from your entry, right? And so if we climb back up again, this actually helps you with options. It actually just gave you're being given a gift of volatility, which you didn't even bet on in the first place, right? And so you're being given volatility here. And again, there shouldn't be anything that removes you outside of price anyway. And so if price did end up coming down further, if it didn't hold, okay, then you have to react to price, not the event, right, of what was happening. On the equity side, obviously, you can be like, well, what about the price on Bitcoin? It's like, okay, well, I mean, if you on a technical level, we would have been out on Bitcoin a long fucking time ago, right? Bitcoin was a long-term investment. We sit in it. That was it, right? That's a different story. So overall, equities here, there's nothing that would remove you, even though it was quick, right? The only thing that you would have got up was for short terms, and I don't think we need to address that. That's for sure. No differences across. No differences across. Value not moving as quick, but that moves. It's moving at its rate. This is probably the cutest over here. Is small caps coming back into here. Very sneaky, and we talked about this would be very sneaky. Net. The net one is we went over this trade back over here. Let's see, one of the more interesting thing is whatever's going to happen here with oil. It's in the exact same spot. I've talked about how energies on the equity side have not even caught up into here yet, which almost, if you just chop this, you just chop it. This is actually where we are right now on the equity side. So we didn't capture this on the equity side, this whole area, but if you just chop it and then you bring it down to here, this is actually where we are. If you come over here to just, if you look at like XLE, that's actually where it is from the low here that we had took this entry point. We didn't get the move from crude from the whole oil side, which is interesting. So this is also a nice, again, it's a great starting point for the long-term trade. Again, we're trying to put some long-term trades on. Um, Again, if you want to, so you should always, again, not just take my opinion on things, but if you want to bring in, so what I'm saying is that there should not be a negative effect on from capital gains, what just happened, right? We already sort of knew, but if you think with your own opinion that, okay, I see what you're saying, but I actually think that there will be a reaction, well, then again, realize it's going to be on the growth side. That's the momentum side is what will get choppy, right? That's the side that will get a reaction. So if you think that there is going to be that, well, then think about where they're going to put their money. Everyone, even though the taxes are going on, what is the taxes for? It's to fucking do fiscal spending. It's to have the government spend money. They have to pay for it. When is it going to happen, though? The spending is now. The paying is later, right? We're talking about taxes over 10 years to pay for the thing that's going to happen this year and next year. So think about it. We're spending all the money right now, but the taxes are going to be recouped over like a decade, right? And so at the end of the day, that's happening right now, which means what? Equities will be affected right now, not in 10 years. Who gives a fuck? We're talking about right this moment, right? And so again, it's which one's bigger? What about the trillions and trillions of dollars that's never happened in human history that's being spent right now? Are you going to care about taxes in 10 years from now or about the fucking money right now, right? You're going to be in the market for what's about to happen with these prices. We know specifically where those are. So if you do think with your opinion that there will be a reaction because of taxes, then you'd want to be in the value side still, right? You'd still want to be in the value side. Remove it from tech if you think so, if you, whatever you want to think. It'll be on the value side where the spending's still happening. Those things are not, that's the whole reason for taxes, right? So that's one way to think about it. I mean, there's almost no way to like argue about it even. I mean, I was having arguments all day yesterday with people, so yeah. I mean, there's just not an argument for, like, if I was managing someone's money, right? One of these people that are going to be affected by this. If I was managing one of these people's money, I would, the whole argument I would use would be, again, if you take your money out, the risk is here. So it's like, okay, yeah, if we take out the profit right now, you will not be subject to that higher tax rate. So let's take all the profit right now. You're in a great spot. These people probably entered somewhere back in here, right? In May or so. Middle of May when we finally got out of the little bit of a rut here in June area, right? So if you got long positions from there, you've made a pretty nice amount on paper. So you take all that profit right now, okay? Let's say you have a $10 million worth individual here. So they take, let's just say they're worth more than that. Let's just say they take $10 million of profit here, right? Some big boy, right? He's got a big position, $10 million. You take it right now, you're only subject to the tax rate right now. Now, let's just go ahead and play devil's advocate and say that's a long term, that's a 1 year plus, right? That's a 1 year plus, that's a long term capital gain. So they're only paying the pesky 24% or so, right? And not the full short term income, right? Like I pay. So they take that right now. Now, the risk is that they have to pay double that, right? They have to pay the 43% or so. So they would have to pay 20% more or so, right? They would have to pay another 20% on top of that gain. Well, what's their gain? Let's say if their gain is, again, from this area here, let's say it's like a 40% gain. It's probably going to be, let's call it about a 50% gain. Okay, so 50% gain on whatever they threw into the market there, right? And so if that equaled 10 million, right? So that means they invested 20 million. They're gonna gain a $10 million profit. They're gonna lose 23% or so of that, right? Let's call it 20, because at the end of the day, they're probably not paying that all of it. So if 20% that they're gonna have to pay on tax, right? And they take that all right now, right? That's pretty damn good. 10 million minus 20%, right? That's what they get. Okay. The alternative is that they keep holding that, and it's going to be 10 million plus X, X being whatever amount that you could gain from here until, let's just even say, the end of the year that you wanted to wait and see. But if you was plus X being just infinity, right? Whatever the fuck it would be, but it's another 20%. Okay. Can we gain 20% out of the market here? Well, based on the market right now, yeah, if we just keep trending, that's really fucking simple. Can you gain 20%? Well, I mean, everyone would say, yeah, everyone's really hot on equities right now, and has been for fucking all human history, right? 20% is nothing, right? So we just need to gain more than 20% to already break even on the new taxes from where we are right now. Okay, so well then I don't really want to take profit on that. You can convince me that. So I understand that part, but what if I just take all the profit right now and re-enter positions immediately after, right? So we take all the profit right now, get the 20% tax rate, and then I enter everything 10 minutes later. You can do that, okay? What's the risk of doing that? What's the risk of selling everything right now to go enter tomorrow? Or to enter, let's say, from quarter to quarter. You sell everything in December and then buy everything in January. What is the risk you're running? The risk you're running is the same reason why I talk about it all the time, where it's so much easier to manage the position if you entered earlier compared to before or later, right? So if you took the trade from the 25th of March, when we took this really nice trade, and you traded it up to here, managing this position compared to someone that entered over here is so much easier, and there's so much less risk. So what's happening is your risk reward gets really shitty if you have to go and enter, because there's a very big risk of having to re-enter positions. There's a very big risk compared to if you're already in and you can hold and manage it a little bit better. Is your risk worth that 20% compared to the amount you already have gained, right? Is it worth the 20%? You could say, well, we'll figure it out, but every day that your money's not in the market is money being lost, right? And especially if you think the market's very bullish right now. So at the end of the day, it should just come down to, what do you think the market's doing? Think the market's going to go up? Okay, well then don't take your money out, because you're going to need to get your money back in, and it's not going to be simple. I can't draw up a portfolio for $10 million right now to go put that. What are you going to do? You're going to put the same positions? Is it the same? It's not the same. It's not the same. It's entirely. It would already be different. It would already be different. And again, everyone would be doing it if that was the case. Does it look like everyone's doing it? Has anyone exited a long position? We didn't even lose 1% yesterday. Did anyone exit a long position? No. No one exited a long position. There's some algos that traded some intraday. No one exited a long position. And so you can already almost start to put in the assumption from where we are right now that if there was a problem with these 0.3% of people that have this issue, if they were going to do something, they've already been doing it. You don't just do it all at once, right? It's already been happening. They've already been transitioning. These things don't matter. And even if they wanted to, doing it right now and in this moment is not a good idea. That doesn't make any sense. It literally makes no sense. It doesn't make sense to get out right now to go re-enter 10 minutes later. It just doesn't. It's just such a dumb idea already. And to try to convince, listen, these people don't manage their own money. If I was the portfolio manager on that, I would say, I'm not going to do that. You're not going to get me to do that. So, good luck, but I'm not doing that. So I find it hard to believe. And again, corporations, they don't have this problem, right? We're not talking about fucking institutions. No, institutions have nothing to do with this whole thing, right? And I think that's where people think they're like, oh, well, what about like the big guys? Aren't they going to have to, how are they going to deal with that? You really think it matters to them? what they're gonna? Do you think right now that everyone at JP Morgan's going, uh-oh, well, I'll tell you what, guys, it's time we exit our positions and tank this fucking market. Guys, Archegos with the guy that was fucking religious out of his mind, making trades were God, lost 20 billion, and it blew the fuck up Viacom, Discovery, TME, Bidu. They made them drop like 50%. You think anyone's going to sell anything right now in this market while we're rallying through all-time highs? You're insane, right? You're absolutely out of your mind. The second someone starts selling, the whole fucking thing crumbles, comes down. We have fucking panic attacks when the market goes down 0.5% at all-time highs. We can be down 1% from the all-time high and people are losing their fucking mind, right? You really think anyone's going to do anything from taxes? You're out of your mind. What are the taxes for? Banks are laughing right now, right? They're laughing because they know what's going to happen with Bitcoin, and we don't with the whole crypto thing because it's in their hands now. We handed it to them. If Bitcoin was for the people, we handed it to them by causing fucking hyperinflation and making coin public. Yeah, it's for the normies. Sure it is. You'll find out who's got paper hands real quick. I've got paper hands, that's for sure. As soon as I saw some blood, I ran. I'm out of here, guys. Mind you, I held through from 9,200 was my average. 9,200 was my average. But a lot of the problem was that I entered a tiny bit here, but I didn't have much money, net worth yet. And then all through here is when I started turning those profits. It was really in here, right? It was right in through this whole area. That's when I basically maxed out all my stuff. By July, it was already 10% of my port was there, and then we went from there, and we gained about, 500%, 600%. There was plenty that, like, this whole thing, I was like, I don't care. Don't care. Doesn't matter. Doesn't matter. Wasn't the percent loss that happened. Again, it wasn't the percent loss. It's just where we're at. I don't feel good about it. I don't want to sweat overnight. I don't want to have to stay up, which I did that night. I stayed up. That's not what I want to do. So, I'm not going to cry over taking a fucking massive profit right this moment if I have the ability to get back in tomorrow if I wanted to. I'm not going to cry about it. Especially when it gives me options anyway. I did get some interesting messages though. Because I did that that morning and then we got news later, so I got the usual windbreaker type messages like, "Well, who told you that? How did you know that?" Yeah, sure you did. Sure. How did you know? Okay. You got me. You got me. We all just a lot of insider information, guys. Lots of insider information. I knew it was going to happen. So, that's what happened. Say that about everything. You can say that about selling before anything happens. You can just make up some story, tell your buddies. Like, why did you sell before earnings? How did you know? Like, no, I just knew somehow. You could say it about every single trade ever. How did you know to buy? Well, stonks only go up. So I knew that there was going to be good news. Got me. You caught me. Fucking phonies. Equities are bullish, guys. If any of you were wondering, did yesterday change my mind on anything? Did yesterday change the mind of what's going on in the market? No, it doesn't have any fucking. Everything's still the same. We're going long term on equities. We're trying to really push these. And again, my whole thing here is I want long term, and we got pushed out of some of the growth side, right? Some of the growth side, so we had to re-enter some of the growth tickers. That's kind of where we are right now. Value we've sat in. I mentioned some of the bio things that are going on here. I think again, I like some of the larger macro ideas that we have here. Um, I talked a lot about this pullback here on Myrna, and why you should hold through it. And again, I think it's important to, or what a lot of the takeaway is not looking back. It's during the moment, right? We get a big day, and then this day happens, and you can hear my tone and the way I talk about it, right? I think that's important, and I'd even just talking to myself. That's why I talk to myself in here. Is I can tell myself, and while I'm talking to you guys, that okay, this 5%, that's not a problem for me here. Got an inside day. I understand this can probably bring a little bit further down, but I have a long-term trade. I want to really hold this and try to get this target, this idea here, right? I want to be able to get it, and I know I'm on a sharper trend than what my average trend is here, average velocity. And then the next day comes, right? Another 3%, even pushed down a little lower, but I'm like, okay, I'm actually now at the velocity I expected. That's where I wanted the price to be. So yeah, you're down from here. You're down almost. You're over 10% loss from here. I'm up. I'm still up, right? You're still up here, but you're down. And again, it's like while I'm doing it live, you can be like, okay, well, if he's willing to hold there, then it must be all right, or he's an idiot, or he's gonna lose his money right here. And then we get the day like this, and I'm like, fuck yeah, I told you. But it's not like I told you so. It's like this is why we do it, right? This is why we push through things, and why we change our tone, and why we change what we're looking for, and right. And again, it's important to, and again, to see the differences in how okay the timing's gonna be different because of this, and how we can look at some of the differences between this larger value side and what's happening within this space, and growth and the timing errors, and understanding how this here is completely different from, like we were just looking at spot there, how this average here is completely dominated by mega caps, and how this here is still, it's just as good as where we see the NASDAQ average being at all-time high, right? And understanding that is not easy. It's not easy, but it's important, right? And, how we can look at these and understand how the liquidity is working, and earnings can be a pain in the ass. But again, if you played every single ticker, and earnings could blow up tickers, could gap up tickers, right? Could be explosive, could be good, could be bad, right? What's the overall? Well, the overall is good. It's going to be better than worse, right? And so if you play enough and you capture enough, you're going to gain most likely, right? But if you only traded a few different tickers, and those were the ones that gap down, and then you go, wow, well, that's unfortunate. Yeah, that is unfortunate, because you basically just lost a probability. Probability was on your side, but you actually got unlucky. that could happen, right? And that's why we try to put ourselves in a position where it's not going to happen, right? It's very easy. I have friends right now that, like, I literally argue with every person I know, basically. That's basically has been my life since last year, just arguing with everybody I know, because that's just life, right? That's life. And it's usually, the conversation usually it hits an inflection point when it's like, well, here's how I lost money and why I got unlucky. And then I'm like, well, I mean, technically the whole market's up. So the fact that you lost money while the market's up probably means you did something wrong, right? That's like, if I lose money, it's because I did something wrong, right? No one's going to say, if I lose money, no one's going to be like, well, you got unlucky. They're going to go, no, you were just fucking wrong. But then as soon as everyone else loses money, it's like, well, it's fucking unlucky, man. I mean, all right, you say so. I don't know. I don't know. I'm telling you what, guys, I love this bio play so far. God. Not gonna lie. In terms of our macro side, with so dollar still pushing down, we got this again. We're getting a little bit of just consolidating this move here. Uh, the super cycle in terms of commodities, right? We continue gaining on commodities. I think I saw someone post the corn thing, right? The big commodity besides gold to think about is the lumber side, right? We've seen lumber prices continue to fucking skyrocket. Why? Well, houses, obviously, home builders, right? And we've seen home builders just continue to this is the construction side that's a little bit more tied to the commodity, like the lumber commodity side, and then if we go to something more on the home builder side, it's the same chart, but the point being is that they're all up consistently, right, on that side, and even the individual company sides, right, and so a lot of this again is tied to the super cycle in terms of commodities and how we're so supply strapped right now, but how we're also excuse me, I got to fucking sneeze. Excuse me. Okay. So in terms of housing, right? We're not in a housing bubble or anything like that, and we know we're not because again, it's actually a supply of it. We're having a supply shortage in housing, but it's not based on speculation, right? If you go back to financial crisis, what was happening? Well, fucking from like 2005 to 2007, the people there wasn't normal people buying houses. Yeah, there was normal people buying houses, but what was causing the actual problem was speculators, where investors were buying property, right? The crazy stat from Miami in like 2005 was that 80% of all home buyers, 80% of the entire market was made up by speculators, by just investors, companies, corporations buying up fucking houses, not people, right? We're not even close to that, right? We're not even anywhere near that. So again, in terms of the equity side, equity has so much room to grow on that. And so again, when we look at some of these things, it's like this has been such an easy, um, not again, no trade's easy, but it's been sort of an easy idea on the mind to think about. Okay, supply shortage, demand is there. And actually, based on what's happening with government spending and everything else and inflation should push this as well. These things all line up and make a very nice macro trade. And so these have, if I'm going to put my money on something, I'm going to put it on something I fucking know for sure, right? Okay, I can see it, I feel it. Smells like roses. It's roses. It's not like that rose could be shit. It's not that. All right now. Yeah, the whole home builder thing is definitely very good. Yeah, there's a lot of a lot of different ways to play it for sure. Having a couple of brain farts right now in terms of individual companies. I've obviously posted a few of them. Um, my usual lingo of oh yeah, I don't even know what the company is. I know the sector. Yeah, that's actually interfering with my ability to tell you right now the companies, but it doesn't really matter, does it? At least we know what I'm talking about. Here you go. That's the joke. That's not it. Great move so far. Again, everything has been within the same bias that we've had so far. So I'm not changing anything so far. Not changing anything so far. Uh, those of you wondering, in terms of that money that I took out of Bitcoin, I'm still like, I haven't like I haven't transferred that to like my broker or something like that. So I'm not spending it currently. I'm not exactly sure. You think about it this weekend. Think about it this weekend. I don't really know. Do not really know. It might just get thrown back into Bitcoin, just not where it is right now. That's all. See how net does on this supply here. Again, we're trying to look for we're just very bullish on equities, but we still want to find those tickers that have velocity of their own and that is going to beat out the market. So when we look at some of these, we are looking for these technical areas that there should be some sort of alpha there that's more than what we're getting on an average, right now, comparatively to, like, I think the best way to compare it again is just to use the mega caps. It's hands down the best way to, if when we're talking about growth, is if you want to figure out, should you are you generating alpha? Are you making a larger profit than the average? I would just go compare it to Apple long terms. Go look at Apple, look at the long term calls and see how they've been moving and performing in this area and how it's moving right now comparatively. And then go look at whatever growth ticker you're looking at and are you generating more here? You want to be in the ones that are and should have some sort of probability that they continue to do so, right, in these areas. And again, these are very straightforward ideas, and that's where like the semi idea came in of, okay, I'm in a growth ticker, and then I'm in an area that has a shortage of supply. It's also getting government funding. You start to add on these ideas, and then you add in, okay, based on the technicals, it's actually trading well above uh, and beyond on a sharper trend, and you start to put it into picture of like, okay, that is alpha. I have something more I can gain there comparatively. I want to be a part of that. I want to be a part of something that's leading, right? And then of course, then you come into, okay, I want long-term trades though, so how can I manage these ideas and put them into practice? And you don't want to have to be in something that you're over managing still. Not during this time, at least. Not that you can't be taking, you know, the riskier trades still, but you know, I think it's right now still, again, through earnings and everything else, there's a lot of variance. And so the best way to push through this time, and again, we just had a big news event, the best way to push through that is just to have longer term contracts. And again, even if you just take out the contract word and the options word and just have a long term trade, you're going to have less exposure to the moment right now, and which is good. You want more exposure later on, not right now, right? You want to get exposed to when your underlying's up 10%, not when it's up 1% today, down 2% tomorrow, up 3% the next day. You don't care about those actions. You care about where it is actually if it's up 10% in 2 months. My big thing here is this travel thing. I am going to be putting a big weekend trade on with a little bit more short-term exposure on the travel side. I think that this is about as clear cut as it gets in terms of probability for a probability to go get, if I want my 100% right now, even though I'm trying to do longer term trades, this is 100% a longer term trade to trade travel. That's a long term trade no matter how you look at it. But I am going to be putting some bets on a short term gain here coming through, May monthlies. May monthly kind of exposure. It's sort of a gradient across travel, so I feel pretty confident about that. Okay, small caps coming through here. Okay, hard to We'll see. Our China ticker's getting going. We'll we'll see how our trades do here. It definitely throws a wrench in some of the ideas here. And like again, I have this Baba plan. I'm in this trade, right? I'm in this trade. So I obviously confirmed it back on this day here that I was still within that trade. But um, the idea of we just got taxes here, and then we have crypto making moves, and then there is still, questions in the air on exactly what's going on with China. And so I'm trying to bet on China because I think it's at a very low point and a good time in terms of probability to take this trade and try to capture some points over the next couple months or something, right? But we're basically buying at the highest possible amount of volatility and different things that are going on that could shift the narrative in terms of what's going to happen, right? There's like so many different things that are actually happening all at once that maybe that actually makes it a better trade, right? Because you have this, you're basically buying at a point where it could only basically turn into less hecticness, right? Where we start to we basically condense it, right? We have all these things that could be happening. Those will go away, which should make things look a little better, right? I guess it's one way to look at it. We'll see if that happens. But so far, we're getting pretty good moves in terms of like Bidu here from the lows. These Archegos trades and everything else. I still don't know. So, Bidu's definitely a question mark there. And then when it comes to the other Archegos trades, they're still not. There's almost nothing to see here. I think the other interesting one is what's going on with Credit Suisse. I mean, it's not like it's been a secret, right? It hasn't been a secret, but uh, yeah, I mean they are really fucked up. So typical London fashion. What happened? Yeah, we just keep putting points on. Oh, where's my charger? That sucks. Oh, I'm missing a few of those charts from the 21st. Oh, right, because we're on this layout. Okay, never mind. Never mind. I didn't take screenshots for the 21st. Forgot. I have a few of them. But... Come on, guys. Clean energy and solar should be going up because Bitcoin is good for the environment. So that's why I'm buying back into clean energy because Bitcoin is good for the environment. So, you know, like it's good for the environment because it will cause clean energy to happen sooner, right? It's not negatively affecting the environment at all. Trust me. I know because I'm heavily invested in Bitcoin. I'm talking third person about other people, but they say that it's good for the environment while they own a majority of Bitcoin. So, they trust me. Has nothing to do with the fact that I own Bitcoin. That I'm telling you that it's good for the environment. No one would obviously think that either. They'll just take what I have to say by the word, right? No, it's good. Chinese miners running on coal. It's pretty good. It's great. I love it. I live right next to a Bitcoin farm. No pollution. Very good. Very solar. Very solar heavy. You know? Do you guys like that T move? I know you guys. I know you guys like that. I know you guys like it. Where's our fucking chart, by the way? Where is it? It's not on this one. Not on the other layout. Is it? Let's see. See how long it takes to load these drawings. Obviously, we had a hectic time, but we've been talking about that whole communication thing that's been going on for a week or so. There's been a lot of different things going on there, which we actually captured the brunt of, which I think was awesome. Oh, it was on this layout here. So we had this whole thing happen, but uh, with that came some fucking great trades, honestly. Some great trades. And then we got back in T, Verizon, Com. Yeah, this has been interesting. We're right back onto the same trend, right? Which is the funniest part. Again, I don't suspect, or I don't expect, um, much movement at all. This is gonna be the slowest moving fucking thing in the world. So, it's more about just proof of concept of what we were trying to do down here. When we look around, the the flow is just so it's so consistent on what's been happening on this side that where am I typing right now? The fuck? I think that just lagged me out for some reason. The the other layout sucks. We're gonna stick with the new OG layout. That one has too many things to load. Yeah, we're getting going on banks. Get some. I mean, again, pretty fucking straightforward. Also, I think the comment I made yesterday, I think Mobsky was asking a question right before that. If rates go up, people will hold forever. You guys thought that Wall Street bets with the whole GameStop, them having diamond hands was insane, right? The diamond hands out of their mind, right? Have you ever seen institutions have diamond hands? The 1% that own the 99%? Imagine if they have diamond hands and what happens. What does that market look like? That's the way I look at it. And that's the honest truth though, is that long-term investing in what sort of pension, like, first of all, this is like the funniest part is like if we just again go into normal people have like 401ks, right? You don't have to pay fucking this tax on that, right? But normal people don't understand. But whatever. You don't pay that on your 401k, which is where a majority of people have their right, where they're getting exposure. So anyway, uh the idea is like, well, you just keep pushing through long term forever and ever, right? Until basically I have no fucking clue, but you just keep pushing that long term investment for your whole life, and then apparently you retire and you take profit on it. I guess. But that's how institutions work, right? They never take the money home. They just keep on paper going up and up and up, right? If they actually took profit, they'd have to actually pay a fee, right? That's the tax. So the less trades you make, the less fees you pay, right? And that's the whole point anyway. And so if the fee goes up, well, then I'm just going to trade less. I'm just going to hold it for longer, right? And so when I need to actually get out of the trade, I'm going to make sure I do it just once. So if I'm going to take profit on something, I'm going to do it all at once, right? Do it all right now. I'm not going to do a little bit now and have to pay the tax on it and then do it again, pay a little bit more tax on it, right? Even though, yes, if you add it up, it'll be the same, but it's not if you take profit today and then you wait 10 years to go take profit again, right? That's a completely different thing. It's time and money, right? There's different things, and again, it's not even like we're talking about that fucking much money for an individual to but still they don't take multiple trades there. They're going to do it all at once and pay one fee instead of 10 fees, right? That's just how it fucking works. There's no reason to pay the fee right now. So there's not gonna be a reason to pay the fee in 2 years. It'd be different if we were in a different state in the market, but I mean, yeah, I think that's what I mean. Like I looked back and go to 2013. This is where look at you can't even the funny part is here is that if I show you this here, you don't even know where it is. Where's the tax? Where's the capital gains hike in here? Do you see it? You'll all think it's in one of the spots here, but it's not actually there where you think it is. And so look, it's somewhere in here. I can tell you, it's somewhere from here to here. It doesn't make a difference, does it? No. But I can tell you they did it all at once, right? If you're gonna do it. But a crypto capital gains are a different story. That's a different story. Why is it a different story? Because Bitcoin's not in a fucking pension, not in a mutual fund. Hasn't been going for hundreds of years. The big difference. Baby, it's brand new. There's still insane volatility on it. It goes up and down 30% all the damn time. So if you hear there's going to be higher taxes, yeah, I'm going to take profit. I don't feel as comfortable holding it over 10 years as I would fucking stock. I've been on a share buying spree, says Ecto. That's what I'm probably going to do with that money. Pick up shares, and then from there I'll turn it into something else. But just to have it doing something, right? I'm not going to sit on cash. You're technically losing it. I would actually be losing money sitting on cash right now based on the dollar's path. Based on the dollar's path every day, I'm not spending it on something or using it or having it in the market. I'm losing money, so I would be losing money. It's at the point again. We're at 0% interest rates. Oh fuck, guys! I forgot one of the biggest points I was trying to make. Oh god. See, now someone's gonna watch the video and they're not even gonna get the point of what I wanted to say earlier. Okay. Fuck, guys, big mistake. Big mistake. My bad. What's the biggest thing in the market right now? What's causing everything to move? Spending, you'd say, right? And infinite QE. The Fed just keeps printing money and 120 billion a month in buying from the Fed, right? That's a lot. Yes. What's the other part of that? Interest rates. Interest rates have been at zero since the financial crisis, fucking 13 years ago. Interest rates have been at zero. We briefly increased them, but barely, right? We barely increased interest rates, barely. And then we put it back down because of COVID. And it basically looks like we're maybe in a few years we'll change them. But how much are we changing them by? By basically nothing. By basically nothing. We're basically going to be in a very low interest rate environment for all time, right? We're kind of stuck in it. There's reasons why we're going to increase interest rates, like why that's why we listen to Powell and we try to see when is that going to happen, right? Okay. So what do capital gains taxes, capital gains, and increasing them and interest rates have to do with each other? Well, basically by what's happening right now, right? By increasing capital gains, what's the point of that? Well, it's so that the government can do projects and spend money, right? And we're actually taking in more by raising capital gains, we're taking in more revenue on the government side. That's what taxes are for, so that they can spend the money, right? So if they're going to collect more money, what does that translate to? Well, what happens is that if the government is collecting more in taxes and that function is happening instead of not happening, right? And taxes they're not getting as much money and they're spending money, right? If they're spending money and the deficit keeps growing and growing, compared to actually if they're collecting more money while they're still spending a lot, but they're actually not causing as large of a deficit, what's it going to cause? It's going to keep interest rates at fucking zero. It's going to keep interest rates close to zero for a longer period of time because we're increasing the taxes, right? And so it's a different tool that the fiscal government has that the Fed doesn't have, is that actually if taxes are up, then they can actually keep the interest rates lower for a longer period of time. So it almost guarantees interest rates stay low. And if you don't think those things are not connected, and you don't think that Janet Yellen, who was once the chairwoman of the Fed, who is something to do with the Treasury or something with Biden, right? Something Secretary of Treasury, something like that, I heard. And if you don't think these things are connected and that she's basically the economic mind of the world, if you don't think that they don't understand how these things work and that's not why these things are happening, and how do you keep the markets flowing? How do you keep the market happy? Low interest rates. How do you turn it so that it's a fucking feedback loop by increasing capital gains, which they're not going to do anything about, but we get to collect money on, and then who do you keep happy? Well, you keep the poor people happy because you're taxing the rich more, right? Yay, we finally got to tax the rich more, yeah. But when they find out that it's actually they're going to make more money still because the interest rates are not going up, guess what happens? If interest rates were up, your fucking bank accounts would pay you more than 1 penny every year. You probably aren't even making a penny a year because interest rates are so fucking low. How many of you actually had made any money from your savings account in the last fucking 13 years? None of you. None of you have made money. And think about it, right? Here's a funny thing to think about. Why the fuck should the bank pay you? They're holding your money. You should pay them, right? If you give money to someone, don't you think that you should have to pay them to hold it, right? Why the fuck should the bank pay you money, right? Well, again, that's a meme. First of all, it's a meme. They get to use your money, so obviously they should pay you. But the reality is that we're at 0% interest rates. The bank ain't ever paying you again, guys. You're never putting your money in a bank account and getting paid. Ever. Not again. It's not going to happen. We want that to happen. Normal people would benefit from that because normal people don't have enough money to go fucking put in the stock market, right? They got 401ks, that's it. They don't really have money to play with, right? So it'd be nice to get some interest rates. So what do? You keep everyone happy. Poor people get to say, well, we're taxing the rich more. Woohoo. And then rich people get to go, well, I get to have 0% interest rates and fuck it. Well, market will keep going up, so it's fine. Keep poor people repressed. It's good. It's just a loop, guys. It doesn't fucking matter. It's one fucking. We're in one cycle of the politics anyway. Who knows what happens when the next Trump comes into presidency? And again, guys, here's the thing to remember, okay, about rich people, okay? And now I'm not a rich person, okay? I'm not a rich person. Yeah, I'm fucking rich, but I'm not a wealthy person. I'm never going to be a wealthy person because I have bad spending habits. And I'm a fucking kid and I'm stupid, right? But do you know what these fucking people got? And you know what they're guaranteed to get and have been guaranteed since the Reagan tax era? Is that Trump came in a week later, cut taxes by $1.2 trillion, instantly basically gifted rich people more money. Instantly. $1.2 trillion, right? That was it. And every time that some new fucking politician comes in there, he can go in there and go fucking cut $1 trillion of taxes, right? And so any money that you're going to have to pay today is money that you'll get paid back tomorrow through your fucking investments and through some fucking politician one day will change up the fucking tax code and pay you back, right? There'll be some sort of thing for you, right? It's a fucking loop. And at the end of the day, look at how things are growing. It's like I said, Apple will be a $50 trillion company. Bezos will be worth $1 trillion in fucking a few years, right? At this rate, he'll be a trillionaire by next year. if we actually continued and Apple grew as much as it did last year, he would be a trillionaire next year. I wouldn't expect it to double again next year, but if it did, he'd be a fucking trillionaire. So at the end of the day, we're pretty fucking close to these things. Just, people getting a lot of money. Doesn't matter. Wouldn't holding by the big boys make tech/growth the preferred stock since they're better equipped to adapt to macro changes? Well, the difference is that that's growth is actually the momentum ticker, or the momentum side of the equation. And so if you're going to take profit, what's going to happen to the momentum? It's going to stop. And if the momentum stops, then what does it do? Well, we see it, right? We get these big consolidations when the momentum stops. And we've sort of already got it. So, yes, in the sense that through like what we talked about with COVID was that growth can do well during COVID because it's not being priced for a rate that moment. And a lot of companies actually did well during COVID. They actually made more money during COVID than before, right? And so that's like one of the things. This has nothing to do with that. It's not about the economy being in a rough, like, think about it. Like what your question's saying is, wouldn't they be able to handle that? What are they trying to handle? It has nothing to do with the economy. The economy is doing fucking great, right? Growth does well if the economy is great or bad, right? This is just a tax change. And so if people take profit, that affects stocks all the same, but it actually affects growth more because growth is all about momentum. So if you took an equal profit on value and an equal profit on growth, the difference there is that one of them is momentum based. And so if you stop momentum, then it's going to take longer, right, to get going again. And so that would mean, in terms of the way you would trade it, you would take profit as well and then wait to go buy back in. Whereas with value, you could just actually hold through the take profit. That may be happening with a few areas because you don't need to worry about momentum. It doesn't actually need to get going again. It's not like you need to rev the engine to get it going again. It would just continue to go anyway. With growth, it would fucking consolidate, and so you would wait. So on the trading side, if people actually took profit on the growth because of taxes, again, has nothing to do with economy, so this would have nothing to do with having to adapt and do well. Has nothing. That would be a one-time thing. If people took profit now, and this again would be at the end of the year. So we'll look at the end of the year. We'll talk about it at the end of the year and see if there's volatility because of taxes. It will be at the end of the year. It won't be now. It'll be at the end of the year. And so growth would be the thing that would get affected because it's momentum, right? If it has momentum, it has momentum. If it doesn't, then it needs to get it, which means consolidations. And again, it's you can see it. Watch. I'm going to bring up the Dow, right? I'm going to bring up the Dow, and again, nothing changed during the market or the economy other than the economy was heating up. But if we look at the difference, what's the difference? Well, the momentum side has to fucking consolidate because it lost momentum. The Dow, look at the Dow just fucking kept going. It looks like shit. It looks like a turd over here, but it doesn't have to consolidate, does it? It doesn't have to do anything. It just keeps kind of moving. It loses momentum. It just keeps going, right? It doesn't really matter. Here's the Nasdaq with growth, right? You get going with a lot of momentum, but then you have to really fucking consolidate the move. Yeah, you're in the same spot, right? You're in the same spot, but the difference is with trading. There's a difference there with trading, right? The difference is that this came down a lot, which means that you probably lost money because of that, right? That's the difference. Because again, it doesn't matter why you want to buy something or why you want to sell it. You still need to be able to make the trade somewhere. There's a difference between selling here and selling down here, isn't there? Well, the difference between selling here and selling here is a lot smaller on this side. Look at the difference. The variance, right, between the two, the high to the low, is very different there. And so that's where the value side comes in, where you'd be fine here. If there was a tax event that happened and people want to sell, you'd be fine on value. But if you were in growth, you'd be a little worried because you're like, well, how long do I need to hold and how much am I about to lose, right? Because it's momentum, right? So those are two different things still. Two different things. But it's a good concept to bring up, but this is again the reason why this happens is because everyone already knows this, right? It's not a revelation for me to tell you guys that. This is again what people know. So since we know it, we're going to react accordingly, and that's why when this starts to happen, we didn't trade growth at all, right? It's not like I'm a fucking magician. It's like, well, no one's going to trade it, or no one's going to want to buy it right now. It's going to consolidate. It's the timing of getting back in that's so important, and that's what we do here, right? And what I show you with charts, right, with a pattern, is we get into a point where I go, this is going to be a breakout, and that's the opportunity, right? And that's what we look for, and again, that's sort of the alpha, right? Your comments on having your money always working for you started to get to me. Lit a fire. Yeah. No, it definitely it doesn't, it doesn't so much matter like day to day, like in the long term, of course, like if you're just talking about one day, but that can actually lead to I mean, if you do just take it as fucking straight up like that, then I mean, that's honestly how it is. If every day you don't have the money in the market, and it's again, that's where it was going to be, right? That's where some people will have money but they don't trade to begin with, so then they force it and then they lose their money. So it's like, no, you would have to already know that you can just go put your money into like you can put it into like a Vanguard, right, and just make your 12% a year, right? And if you know that's your odds, then every day that you haven't put the money into a Vanguard for 12%, then you're losing it. Or if it's like if you can trade for 50% a year, 50% gain, then every day you don't have that in there, that might be the day that the market just fucking paid you all the money. And that was my revelation from last year, because what I realized was it was basically in a very short amount of time, and I always knew this, and this is again a lesson that some of you who have like family or mentors that are wealthy or rich, or what you learn yourself, is that you do a lot of work and you learn things over a long fucking period of time, right? Your whole life you're training or you're practicing for your whatever it is that you want to do, right? And you're learning and you're taking it all in. And if we're talking about it on the money side, all of that you're doing to go one day make a lot of money, you're going to make all that money in a very quick amount of time. So you work your whole life and then finally you get that big paying job, right? That pays a shit ton of money. You might have went from a $50,000 job to a $250,000 job from 1 week to the next week, right? And so what happened? Well, you became you had a lot more money in a lot shorter period of time, like in a very short amount of time, right? And so when you go from 50,000 to 250,000, and then you go from 250,000 to $1 million in a year, it really does come to the fact that you become rich very quick. It takes a really long fucking time to get there on the average, but when the money does come, it comes fucking very quickly, right? It's like, think of again, I don't want to use things outside of like actual money and trading, but an NFL player, right? Okay, an NFL player, he plays football his whole life up until he's, from he's a child until, early 20s in college, and he still hasn't made any money. Hasn't made a fucking dollar until he's 21. And then he goes to the NFL draft and gets drafted for $40 million, right? He signs like a 4-year contract, $40 million or something. And now he's a fucking millionaire the next day, right? Gets a signing bonus, gets paid his paycheck. Maybe not like a millionaire instantly, but yeah, basically overnight he just became a millionaire, right? That's how it is with this shit. This shit, you go from nothing, and look at some of these people. That's how it is, and some of them it's a little bit luck, and luck is always involved. But yeah, and that's where I really take to heart the idea of, if my money's not in the market, that's the moment where I became rich, and that haunts me. You know what really haunts me is that, okay, that concept, like if your money's not in the market, you know what happened over here, guys? This is the reality, is that it is like that from one day it changes it, is that, so through here, right? I was working at an institution, okay? So from the end of 2018, when all this was going on, I was actively trading, but not like an ass load, because I was working at an institution. I actually just moved down to Florida to open up a trading floor in Florida for, again, the bank I was working at. So I moved down to Florida for basically a year and a half, right until 2020. So yeah, about a year and a half. And so I was at an institution trading for institution, but I was basically full time trading my own portfolio, right? But I wasn't like, we're not talking about like the money I have now. And so, because I was still working at an institution, so I wasn't really like full risk. I mean, again, I've been trading full time for a while, right? For a few years during this time, but it wasn't like the level of what I'm doing now. It was very specific to what I was doing while I worked at an institution. It basically took all the money that I made from the institution and put it into this idea. And but I basically spent all my money, and you could basically at the end of the month guarantee that I had no money at the end of the month, because I was trading it, and not to say on paper I didn't have money. And so, you know what I did over here? Well, in February, I moved back to back in this area here. I moved back to New York. So I had opened up the trading floor for that year or so, and I finally get to come back to the New York office, right? And so it was basically, it was right here at the beginning of 2020. I moved back to New York, to the New York office here, and for the same role, but I didn't get a pay increase, so I didn't get a raise. At the New York office, you make basically twice as much compared to where I was down there. So that was the whole point, was that I took that, because the thing with banks is it's like the military, where it's not about how good you are, it's about putting in time. You basically have to put the time in to get a promotion and to get like the next thing. And so my whole idea was I would come back to New York and become like, this is going to be my moment. It wasn't my moment. It wasn't my moment at all. And so, again, I'm almost impossible to work with. I can't work for another person, so I have to be a trader, and then I need to have no guidance. I have to be, if someone tries to tell me to do something, they basically get told off, and you're stupid, you're an idiot. Like, and I've always been like that, and so that's why all my other professions, I've always been. I've never worked for someone. I've always just had an owner or something, and I've been like the boss, manager, whatever. So I basically blew up during this time, and was like, listen, if I'm not gonna get fucking paid, like this, I was like, if I'm not gonna get fucking paid, I'm not gonna work anymore. And so they're like, we're gonna keep you on the same thing because again, we were going through like banks were already going through a cut phase. All banks were already cutting equity floors before COVID started. They were cutting equity floors, and so turning trading into prop desks, which that's my environment. Like, if that's who I am. I'm a fucking, you put me on the prop desk, I'm gonna make money, but I want to get paid for it. I'm not gonna work unless I get paid for it. And so I quit. I quit. This is we're literally talking about week 2 weeks, 2 weeks before COVID started, right? And so I'm making preparations to trade private. I'm like, I'm doing it. I'm gonna put, like, I was already trading full time. I'm gonna literally turn all the capital I have and put into the brokerage, and I'm gonna figure it out. Obviously beyond. This is where I say, like, if you don't have over 100,000, you're not really doing anything. And so basically up to that point, I was only trading 100,000. I could never trade more than 100 grand. And so that was it. And so this was the moment where I was like, okay, we're like leveling up the shit while I'm putting money into my broker and getting ready to like really turn the fucking heat up. The market fucking tumbles. I'm not even trading it. Not even trading it. The market comes down here. I'm finally, we're talking about in the middle of March that I finally have my money in my broker and I get going. And then, like most of you know, it wasn't even until April that I was like, we can actually trade. We're talking about 2 months of time. It's literally 2 months of time that I turned that capital that I had, like all the money I had left, and made $1 million. And that's like when I realized, what I got. But every day that I don't have my money in there means not only am I not possibly going to make $1 million, it may mean that I'm never going to make $1 million. Because if I don't have my money and I'm trading in this time, right? Almost every single day there, you're talking about, we're talking about, you know, the idea of 100% trade, right? Those trades, they only line up because of the capital that I generated the week before, right? Or the day before. And so every trade basically flowed into the next trade. And if I didn't have the capital, right, then I wouldn't be able to make that trade. And I wouldn't have that sort of the ability to do so, right? And we're talking about that if I wasn't able to, that if I got pushed over this way and the timing was a little different and I didn't have my money in that market that day, then we're actually talking about a possibility that I never actually made money and maybe I made trades that I actually lost, like other people lost, right? That you actually lost on instead of gained, and you're in a weird spot where right now you have these people, right? And other people I know that lost their job from basically this whole thing. That basically they had like, they had like 200K, and then they put the 200K in, and they're basically still at 200K, right? And it feels pretty awkward, right? But it's because they didn't, it's a little bit of luck, but it's just every day you don't have your money in the market. That's it. That's literally what it comes down to. And you never really know unless you did it, right? If you didn't try it, then you don't know. But it is a little, a little scary to think about. Definitely a little scary. Like, oh, no, didn't wake up today. Well, shit. I just lost 30% of my money because I didn't wake up. Oh, I gotta put it all in the Dogecoin. Think about it, guys. You guys could have put all your money into Dogecoin. Could have been a Doge millionaire. Oof. How much was it? It was only like $1,000 and you could have been a millionaire? How dumb do you fucking feel? I feel stupid. It was like $1,000 become a millionaire? Is that what it is? Jesus. You got poor ass people out here that became millionaires. They didn't even put barely any money in there. Oh God. You have to work. Again, that doesn't mean do irrational things. And that's my thing right now that I mean, people have always been irrational and doing dumb things. And Robin Hood obviously helped a lot. They're doing a lot of dumb shit and gambling and like how are people losing money while the market goes up? They're just buying really stupid things, right? Because they want to get rich right now. They want to get rich tomorrow, and it's right there in front of them. It's right there. It's right there. It's like putting the money on red. If you don't get it though, then it's it. Right? You don't want to do that. We don't want to do that. Right there. It's, here's a good example. Here's actually a really good example for like a more normal perspective. Is that I have a couple friends that they do this. Maybe some of you feel this way too. They do this weird cycle where the market will pull back, right? The market will like pull back to a spot where it's even to any normal person, and they have more knowledge anyway, is that it'll pull back and then they go, oh, that's an opportunity. I want to buy because it pulled back. And so you know what they'll do? They will, first of all, they'll talk to me. And then I'm like, just go buy something. Like, just go buy something. The worst thing, the worst thing that could happen, again, not buying something stupid, but just if you buy shares or whatever, the worst thing that could happen is you're going to have to sell it, right? And you wasted some time. You're not really going to lose that much money if you're not buying really dumb shit. But you know what they'll do? By the time they get their money into the market will have gone up by a few percent and they don't want to do it anymore. And now what it's turned into, on this most recent pullback, that 25th date, I was telling them to go get your money, like get ready to buy some stuff. And they're like, you know what? It's going to take me a few days to get my money into the broker. I don't really want to do that. They're like, you know what? I just, it's not a good time because, if I already had it in there, then yeah, but it's going to take me a few days to get the money in there. And I'm like, hold on. You're going to tell me because it's going to take you a few days to get your money in the market that then you're not going to buy in a few days? They're like, well, it's already going to be up, so yeah, I can't. Like, and it's one of the strangest things, but I know that people do for all things, right? And I do it too when if something's already sort of broken out that I don't want to go buy it because it's like I missed it, but at the same time, you know that if there's like some human error there, then you take into account that, oh, if okay, I have to buy 3 days later, then okay, that's fine. It's the same thing. I'm just not going to make that 3 days of money that I could have made. But if I don't do it now, then you're not going to make anything. And then that translates into buying at the top, right? That's where people start to buy at the top, and because they waited the whole time and then they go, oh, fuck, I should have put my money in. But even things like putting your money into an account hinders people's ability, right? And that's again where I've been trying to use this new line of the best time to buy was yesterday idea. And you can back test that. You can back test that. It's so simple that you can back test it. And if you bought yesterday, you'd more times than not make money, right? More times than not, if you bought yesterday, you made money. Because there's more green candles than red candles, right? You add them up. There's more green. Over time, there's more green. It's not even close. It's not even close. Again, you could say, well, that's because you lose very quickly. Well, yeah. If you missed, this is where I got lucky, right? If you miss when the market actually goes down, like the very quick downward move, then you would be beating the market average by fucking so much it's not even close, right? If you missed every single time, you would basically be a trillionaire. You would be a trillionaire. If you were able to miss the market going down every single time, right? If you miss just one of them, well, you're doing really fucking good. So again, that's where some of the luck comes in, that if your money didn't deposit into your account until the bottom and then you could buy, that's a big difference if your money was already in and then you lost that much, right? But then it's the same thing. Like, even if the market's going up and you just get your fucking money in, it's like, fuck. Trade. Do something. What's it matter? I mean, at the end of the day, it's like, come on. Guys. We've just been going one way so far today, guys. Again. We're in it for the long trades here. What we got? In terms of, see. What's the number here? Okay, yeah, I mean, we're going to probably get all-time high today. I don't know exactly, how much money from Bitcoin is going to the market. I don't think it's happening immediately, but I would imagine that a lot of buying is going to expect it. Again, I don't know. Think about it. I think it's like already been 200 billion from the top so far has come out of Bitcoin. $200 billion. That's $200 billion that was willing to be in Bitcoin. $200 billion that would be willing to be in the stock market instead, don't you think? If you're willing to be in crypto, then you're definitely risky enough to be in the equity market. This is way riskier, right? If you can handle this risk and you exited it, you can definitely handle equity risk, right? Is that money going to flow just to the equity market? That's the question. Where's it flow to? And realistically, where do you think this money's going? Do you think they're going to go buy bonds with it? And who's selling, right? It's normal people selling. Normal people. Like me, you. We're the ones selling. We're going to do something with it. It's going to go in, they're going to spend money on a new fucking car. They're going to spend money on a TV, on food. They're going to spend money in the economy, which again translates to equities going up. So, I mean, at the end of the day, no matter the answer, it's spending. It's going to get spent. All those new rich fucking idiots, right, that made money from crypto, that however you want to call them, they're going to spend that money. That's what you do. You don't sit on that money. That new money is going to get spent, and that's going to translate to something. So, and then again, so when I've talked about inflation, how if we think that all of the inflation has basically been in the crypto area, $2 trillion is inflation. That's not in the normal inflation number. What happens when you take profit on crypto? That money gets spent in the normal economy, which will then turn into the actual inflation number, right? We're at less than 2% inflation. We're getting close to 2%. And if we think a lot of the inflation is in crypto, but then it takes profit and then they go spend it in the economy, and then that actually finally goes into the number of inflation, don't you think it's going to go up? Probably, right? It wasn't there before, now it's there. So, again, it's just by how much, how quickly, the timing, what's the timing? My thing is now, is I just don't know the timing over here now. I don't know the timing. It's going to keep going up. Eventually. Just like gold. Gold will eventually go up. Going up right now. It should have gone up way over here. It doesn't even make any sense. Doesn't even make any sense. But again, it'll go up eventually. But the timing here, this is what I'm worried about on crypto a little bit, is that I'm like, oh, gold's going to go up here. And then you get this shit and you go, what's going on here? I don't really know. But I know it's going to go up. But I don't know the timing. Don't know the timing. see if we get this, you know, we'll see if we get this timing right on the Neo chart. You know, it's not pretty, I would say, but it's a nice, you know, probability wise, it's a good spot. And we've done decently well on the Tesla trade so far. I mean, the thing is here is that here's my problem again, is that these things are tied a little too close. Tesla, Bitcoin, and ARK, they're tied too closely, and that's you're basically taking on extra risk being involved with these kind of trades. So I'm going to see my first thing was that if I'm taking profit on Bitcoin, should I be taking profit on this trade, like on the ARK trades? Like, end of the day, these are almost all the same thing. So we'll see. We'll see. Like this is the kind of I'm out of this position. Square Inc. is basically Bitcoin. It's got equities here, but all the downside of Bitcoin, Square Inc. is exposed to. All the downside of Bitcoin, ARK is exposed to. Right? It has the benefits of the equity, but has the negative exposure of something else. That's the issue. And that's where I'm not talking because Tesla bought back Bitcoin. I don't think that fucking matters at all. But um, I think it's the fact that these things are all it's the idea that's tied together. And that's what people care about, is the idea. They don't care about the price. They don't care about the what, the how much. They care about the idea. And institutions, they just care about the idea as well. Fucking Bitcoin's $55,000, $50,000. No one cares about the fucking price. The idea. That's why the inflation's there. It's the spread between every single bid is extremely wide, right? Inflation is when prices jump. Imagine if Bitcoin could only, again, the reason why it got so high was because of how quickly the price, why did the price go up so quickly, right? If the price was a little bit healthier and there was better liquidity, it would not have gone up so quick. The demand, again, could just be filled at every cent amount, and you could just have a very shallow straight line on the way up, right? And but the price would be extremely low. But it's because of the way it's set up. You have this inflationary state where it jumps in price, real quick. Now that's what it's worth. Could be worth it could be worth $10,000. It'd be the same fucking thing. It'd be the same thing. Wouldn't change anything. You don't do anything with it. It's the same thing. You could split it 20 fucking times. It wouldn't matter. It's the same thing. It doesn't even. It literally doesn't matter. It's just how quick is the idea moving. I don't know. It's going that fast. See. Well, that's the market cap. How do I see? I can't see it on this one, right? This is the future. Okay, this works. The Ethereum prices just kept going up and up. But again, even this thing, like I sold. I'm going to talk about the Zedron thing a little bit. I sold all my stuff on there. I've spent about $5,000. Most of it, again, technically it's $50. It would be technically just $100 if it was just one transaction and fees. So $50 gas fee for the first to convert it, and then $50 back. I made it a few times. I think that's where a lot of the this action comes from, is the fee side. But The thing is with all those cryptos, the NFTs, the the thing to think about here is that if we think of NFTs as a derivative of, so those all run on Ethereum. If the NFTs are a derivative of this market, right? And we're just looking at the future here. If this is the underlying and those are the derivative, so they're basically the projection of the acceleration, the speed, and we'll use speed, basically the projection of the speed of the underlying, right? And you see the speed getting pretty wild, right? And that's when the NFT craze gets going, and then you see Ethereum really start to jump up because the demand is pushing this demand up. It's the same way on the other side, is that if NFTs slowed down, then this will slow down, and it's basically leading, right? Well, then there's a bit of the side. Here's the problem. Here's the problem with cryptos. And when I did the math for the Zedrun thing, what happens if the horse sucks? Right? So you buy, I bought a $500 horse. I raced it, and it sucked. Okay? It can't win races. What do you do with it? Well, you can't sell it now. So now it's worthless. Okay. Well, technically, more are going to be worthless than not, right? If only one horse can win a race, and then there's going to be horses that have better probability to win, then there's going to be a lot of worthless fucking horses out there, is there not? You basically, it's like real horse racing where you retire the horse and it's not worth anything and no one wants to fucking breed with it anyway. So, okay. What happens then? Well, that starts very small. It starts very small. But what starts to happen is you have a very small amount of supply right now. But the supply is going to increase, right? Bring it back to NBA Top Shot. You had a very small amount of cards, the moments on NBA Top Shot. Again, everything's supply and demand. You have a small amount. What happened? Well, since there's only a very limited amount of supply, a bunch of demand started to come in and everyone wanted to get involved with it. It was really cool. Interesting. Well, then what happens? People get frustrated because they don't get to buy one and they don't get to get a drop. So they get frustrated. So what do? They increase supply so that everyone can have fun and play, right? What happens as soon as they increase supply? Prices plummet and drop, right? Because why? Because you just added a bunch of supply that was actually technically worthless. Because at the end of the day, no one actually wants those. No one's going to, they're going to get it and they're going to pay for it, but then everyone's going to go, well, this is actually worthless. It's not actually worth anything because it's like such a common thing. It's not really, okay, well, now it's not worth anything. No one wants to pay for it, right? And that's what happens when you increase supply, is it starts to, you didn't just increase supply. It's everything that came thereafter. It started to exponentially grow into like fucking shit, right? It's at first you don't see the cracks. And then as soon as you start to increase supply, everyone can see the cracks. They say, oh, these are actually worthless. There's nothing here, right? Okay. The Zedrun thing. There's only a few, it's a pretty small supply. But what's happening right now is this idea that you can do this breeding part where you're taking the small amount of NFTs you have and you're creating more NFTs. Well, right now, no one really knows what the value of anything is, right? And they're just kind of on this hope idea that, we understand that only some of them are going to be good, but you can try to figure out ways to create new NFTs that are going to be worth something. But again, here's the problem. The way the math is going to work is that you have a bunch of things that are worthless. They're going to then create things that are even more worthless. And through that phase, you're actually increasing supply. And with increase in supply, the prices are going to go down. And then the more demand that comes in is actually going to realize, and through that it's not worth as much. So the person that's willing to pay one ETH, what are they going to do? Well, now they're going to try to sell something for less than one ETH, and you start to push prices down and down because you want to get rid of that. You're trying to sell it as quickly as possible. So how do you do pricing? You just basically put it 1 cent below the other person, and you just keep doing that. As more people come in, it will get faster and faster, and then you're going to realize very quickly through that volume that it's actually worthless. And then it turns into that sort of moment where you realize the math. And that's what you get. Now, that's happening. It's happening on all the NFTs in different ways. And now the OGs are holding value, right? There's different things that are holding value. Why are they holding value? Because they can't sell it. If you don't sell it, it holds value. That's the whole thing, is that if you don't sell it, it's got the same value as what you paid for it, right? The guy that paid 69 million or whatever the fuck it was for that one art piece, the NFT, 60 something million. Well, if he never sells it, that's what it's worth, right? But is he ever going to be able to sell it? No. No one's ever going to pay more than that for it, right? And that's the whole point. That's how all of these things turn, is that as soon as they get interesting and the volume goes up, it starts to actually pull it down. What happens when the whole derivative market has that realization, right? It turns into a momentum stop on the underlying, which would be ETH here. Right now, all of this is being generated by the secondary market in the amount of demand that's coming in. It's pushing the price up, right? It's not these things are just, they're not actually making anything or doing anything. It's just all sort of a made up idea. Just like we can say the usual crypto, what's the usual crypto rationale to convince you? Is that, well, the dollar's made up in value. The dollar's made up. It's just fiat. It's just made up. And the value of the dollar is made up. What's the difference? What's the difference between the dollar what's the difference between the dollar being made up and then crypto being made up? You can spend crypto on buying NFTs, and you can spend the dollar on buying food and whatever. You can buy dumb shit as well, right? With the dollar. What's the difference between the two? It should be really fucking clear that they're two different things, right? Well, the dollar is, how did you get the crypto in the first place? You had to pay with the fucking dollar, did you not? So which one is going to change? Which one is going to be the one that stays the same, and which one's going to change quicker? Well, the crypto is going to change quicker because it comes from the dollar, right? The dollars would always be, again, you can say in the future that maybe we have crypto. Sure. I don't fucking know. Maybe Bitcoin will be the currency. I don't fucking know. But right now, how is the supply and demand changing? Well, it's not by the dollar's volatility. It's by the crypto volatility, which, again, the price is not being set by the reason why the dollar changes is inflation. If the money supply goes up or down, right? But that's controlled. Is the crypto market controlled? It's not. It's not controlled at all. You have these hyperinflation events that get caused by exterior demand. Those exterior demands are not actually generating real wealth creation. What's the difference in the real world is that there's actual wealth creation. We're taking technology to new places where we have fucking food to eat and buying houses, and we have to actually do things in life. We're buying crypto with our dollars. We're doing things. What's the difference over here? It's happened too quickly, right? You're not generating wealth. You're artificially inflating it. And those ideas actually being inflated so quickly actually tumble it down a lot quicker, which causes, again, an event that happens very quick. It doesn't matter if in 10 years it's going to be worth something. It's what it's going to be worth right now. And if they come down very quickly, again, that's the risk that I'm not willing to pay at the moment. I believe in 10 years it'll be a thing and be a big part of what we do. And in a month from now, it could definitely be that, and I can change that understanding. But right now, that's not what's going on. That's not what's going on. And just like how quickly I was to get out of that thing I just did. I was really excited about it and I did it. And then I figured out the math and then I get out instantly and then I do it with, again, it's the same thing. People lose interest in things. And the fact is that the whole crypto space is interest. The people's interest in the wanting to do something new and different. It has nothing to do with actual value in anything you do. And that's the fucking issue. It's not like saying the dollar can lose its value because we no longer want the dollar. What are you going to do then? What are you going to fucking do? Right? What are you going to... You're going to barter? Like, again, that's the whole reason why there's the dollar in the first place, right? What are you actually going to do with this? You're not doing something that's actually creating utility at all. You're actually, through every action that you take beyond just buying Bitcoin or Ethereum, every action that you take is actually causing to increase volatility, which again is going to hurt the investment part, which was what I was doing with Bitcoin. My issue I see is that I was doing Bitcoin for a long-term thing and just holding it. I made just those first trades and that was it, held it for a fucking year. The problem is that now I see that there's all this exterior stuff that's actually getting involved with it, right? It's like more people commenting on it and trying to make up ideas. And this is where like fraud starts to pick up, right? You get like all this fucking lying about the environment. And then you get all these cool games and things. I'm like, oh, this is pretty cool. All those things generate demand and push the price up. But they're also what would cause weakness. They cause demand, but they also cause weakness, right? And that's where the crack starts to show. And that's when people start to take advantage. I took as much advantage as I could at the moment. Gonna wait and see, right? Gonna wait and see. I'm more comfortable on this side. I think the stock market's a little bit it's got a little bit more for me, right? I understand a little bit more. We all do. Than people they like the companies in it, right? We all like Apple. We all got iPhones. We all exist in this world. Gonna bet on that one for now. All right? Gonna bet on that one for now. But you're gonna regret it. You're gonna regret it. Because you could make millions more dollars trading Bitcoin than the equity market. That may be true. But you know what I won't do? Is I'm not going to lose 30% in a fucking day on the equity market. I'm not going to lose 50% in 2 days in the equity market. Guess what can happen? What can happen? I can lose 50% in the crypto market in 2 days. In a day. Instantly. That doesn't happen in this market. That's the difference. Yep, there might be more of a reward if it keeps going up. But I'm not willing to pay the risk. I'm not desperate. I'm happy with my situation. I'm fucking excited. You know. Feel good. I don't want to risk that. Now, if I was poor, yeah, I'd be gambling a little bit. And that's what people are doing. And that's what makes me scared. Desperation. Desperate people scare me. Good fighters are always desperate. And it's like we can say the economy is doing great, right? Well, because we fucking handed money out to people. There's people still going hungry. You know why? They got fucking checks and then they spent it on dumb shit. Or they spent it on things they needed and now they're back to where they are anyway. So it doesn't really make a difference now, does it? We can say that things are great. Saying the word doesn't change the fucking reality. net got through that last bit of supply. This is what I'm more interested in now. Is what happens above here in this, and I'm so happy that we have TradingView has intraday now lining up with where my trend lines and everything are. Before, again, it would be a little bit of an error. This looks pretty perfect right here. So I'm interested in what happens above here. Again, we're looking for these tickers that have velocity beyond the market. This moving into the supply where it converges is already a sign. And then if there is a move above here, definitely interested. On that, what I'm curious on that net position is if it does make a lot, if it makes a move that's very quick here and puts a lot more points on because of this, then I'll take profit on it. That's my question really for it, is if this goes and shows its velocity here, then I'll take profit and enter a new position on it. Take it home. Just since it's on a different velocity. Because, again, these things that are on their own velocity, the difference is that I want to capture their velocity through a trade that's specifically for that, and then I want to switch back to the sort of average velocity that we're on, and for the trade style that we're sort of we have inherently across the entire market, right? And so trying to, so just to put it in perspective, if I just sit on it and say, well, because I'm trading long term on all my positions, even though this did 10%, maybe 20% here today, I'm still going to hold that through the 10% it's going to pull back, because that's what I'm doing right now. No, I'm not going to do that. I can just go, well, I know that this is trading on its own velocity today, which means it's an outlier from everything else I'm doing, which means I need to treat it as its own thing, which you usually do, but right now I'm not specifically doing that. So this already stands out to me and says, okay, based on this, it's reacting to technical levels, which is not within the market right now. It's making its own move. This is moving before earnings, has nothing to do with earnings volatility, its own velocity. This snap move was cute. That's a good earnings one for everybody. Fucking earnings. It came all the way back down after its earnings. It's so funny how if you just wait a week after earnings, even if something happened, it doesn't matter. How people still react so much. You just look back, guys. You just look back. Why don't you just go and look what happens? It's like on the, it's so weird. I don't know. You just go back and look. Here's Netflix earnings. It's basically it swung between the two different ideas pretty well here. Okay, here's 2 quarters ago. You get the gap down earnings, and then here's what happens after. Okay, here's the next earnings. You get the gap up earnings. Here's what happens after. I really wonder what it's not. Again, I'm not really sure where people get some of the weird ideas from. What do you think's happened here? It's like people that hold shares here. Did anyone exit the long position? Well, they didn't really get a chance to. They didn't really get a chance to. You're just gonna sit in the position until it comes back up here. Maybe they'll take profit then. Who knows? Interested to see what happens here with PG. Again, we had this whole thing. Now, some of these again are the points. It almost makes no difference at all. We're talking about 1% here, so but it's where the candles are here, which is interesting to me. We didn't break through the high end here. Curious to see what we get here. And travel is sort of my play for the weekend here. Some of them, it depends on a few different things, but it's mostly airlines. Cruise lines. Wow. Yeah. Wow. NCLH. Jesus. That was a cruise lines. NCLH. I like a little bit coming into brings back over here, but airlines that I still think that the Jets ETF is fine. That and you can just use AAL if you want instead, but ETF is fine. A little bit of volatility, yeah. Snag a little bit of it. And then again, the China side of things is definitely interesting. Equities are bullish. Bullish. I'm so I was gonna try to make an analogy with SPACs and how the decline in SPACs. It's obviously it's like it's a very easy thing to just say, and I mean obviously I said it quite a bit, and I traded I traded a lot of the different SPACs, but I did it very technically, and I did not do it off of, oh, this is going to be a revolutionary company, and that's what stock promoters do, right? All those promoters, they're just like promoting dumb fucking things and trying to get you to buy them, right? I traded around the $10 level and trying to take advantage of some of the price moves. And uh, obviously, I talked a lot about the idea that we had this big increase in SPACs getting listed and doing things, and it wasn't sustainable, right? There was a bit of a bubble there. Everyone knew there was a bubble there. It was just whether or not it would just continue and continue and continue. And the equity market is so bullish right now that technically they should just keep going, right? What's the problem with them, right? And it's very similar to what I'm saying right now with the crypto space, in that you have all these different NFTs being created. What's happening is that you're creating supply, and it's again, it's not so much that the supply going up is causing prices to come down so much. I mean, it's absolutely all supply and demand. It's the way in which the supply and its worth. What is the value of that supply? Every new 1 point of supply is worth less than the supply before is the problem. Not 1 to 1. And that's the problem. That every SPAC that gets created, it's more worthless than the last one, right? That's just the reality. It's just how much can you squeeze out of it, right? How much can you actually squeeze out of that? And that was the thing, that it's so easy to see it coming with SPACs, and to see some of these that are like, it's like every single new EV company, right? Remember when we went through that phase, like, oh, another new EV company, let's go. It's gonna be a good one, right? Well, every time there was a new EV, we went, okay, this is fucking stupid. Like this, Nikola was pushing a fucking semi truck down a hill and acting like it was driving, right? I mean, that should have already. I mean, that was the signal in my head, right? As soon as I watch a fucking video, or it comes out in an article that the actual video that the Nikola company showed was a fake, and that they actually pushed a truck down a hill, and they just changed the camera angle to make it look like it was actually driving. As soon as I saw that, I'm okay. All these EV companies are fucking fake and they're stupid, right? They're not even real. And so someone like me can go, okay, I'm never trading these for the point of the company ever again, right? It's all technical and based on other people, right? Try to take advantage of it where I can, but I'm going to be realistic about it. And so that's where every single time there's a new one, it's like, this is not even a real company. It's just fucking promotion. It's just causing artificial demand that's going to go away unless there's something to clench your teeth into that actually has some sort of worth there and it doesn't lose it. But as soon as you increase supply and increase that shit factor, it just gets shittier and shittier. And it's just going to cause, it's going to plague it, right? It's like the fucking bubonic plague spreading through that entire market. That's what happened. And you can see it and feel it. And that's again where it's where the idea starts to darken and there's negatives that start to come up with the idea. If the idea stayed golden and it never lost its touch, then the supply increasing may not cause as much of a problem. But it's as soon as the idea starts to turn into something else, and then there's things being said that's not consistent with the idea, that you start to lose it and you can see it. And that's where a lot of the things that I've seen so far, they've signaled it and I've reacted to them and then I didn't get hurt by it. And so I've continued with that idea. As soon as I start to see an idea turn into something else, a good example is we were trading a lot of things around ARC, right? And I really liked what Kathy Wood was doing, and I think she's very intelligent. And I was listening, and again, coming out of the COVID bottom, that was basically her high point, right? And so then everyone started buying all that shit through that entire year, right? And it was going very well. And I really liked the ideas. You know what started to happen? Was the language started to change, and I talked about that. There was things that started to being said. There was things that started to be done that were inherently different than the whole start of it. And that's where, even again, that's what I was personally saying, that I went from being a order to being basically on the negative side and on the fence, and I removed myself from that equation, and then all the prices started to come down on ARC after she started saying things, right? As soon as she started trying to convince people other than just being, right, that's where you can just see it. And again, it's not just like I thought it, obviously the whole market thought it, and we started to consolidate all these things. It's the same thing right now where it's like we're going from this point of just it's just intrinsically there, and now it's in question, and now it's, well, I don't know, like, what do we got taxes now, and but I think it just raises some questions, and we're again, or like these people coming out and saying it's good for the environment. That's a thing that's not needed, and again, that should have already signaled that there's something else going on, and then we get the tax thing, and then it goes, oh, okay, rich people complaining about taxes like usual. Like, obviously, like in hindsight, we can obviously be like, oh, so that's why they were trying to convince us it's good for the environment, because we know the next day we're gonna hear something about fucking taxes. Like, obviously they already know because they're the ones that it gets affected. So of course they got people out there fucking making sure they know this shit. Like, it's not. Why is Tesla buying Bitcoin? Like, what do you think these things are all for, right? What do you think is the point of all this shit? Like, Tesla spent barely any of its cash on buying Bitcoin. Why didn't it buy more? They bought a few billion. They bought a couple billion. They bought $2 billion. Why didn't they buy more? If they believed in it, you know how much cash Tesla has? You know how much cash some of the mega caps have? Apple has like $250 billion worth of cash. Do you know that? Every single mega cap has hundreds of billions of dollars of cash. They don't know what to do with it. They actually don't know what to do with it. Why do you think Tesla builds fucking the biggest factory in the world every year? They don't know what else to fucking do. They have literally nothing better to do. Microsoft, all the mega caps, Why do you think they just buy up all their competition? Because they have nothing else to do with the money. They literally can't do anything else with the cash. That's their issue, is having too much cash. Why do you think they do buybacks? And why do I keep betting on the fact that all of them are going to keep buying back? Why does Berkshire Hathaway continue to buy back? Because they have nothing else to do with the cash, and if the cash just sits there, it becomes a fucking liability to their stock price. Because every time that cash isn't being spent, it's cash that's just fucking basically minusing from their fucking their actual the actual profit, right? Because they're just sitting there, not doing anything. They need they can have constant cash flow, but again, if the cash is just sitting there, it's going to take away. So they need to spend it. And so again, there's so many different ways to look at it. At the end of the day, it's really not that fucking hard to see where we kind of are right here. Again, the equities are going to keep buying back. They're going to keep pushing this market up and all that. But there's still questions about some of these other spaces and some of the other newer ideas that, again, why did SPACs just randomly come out of fucking nowhere and start to explode, right? And when you start to put it together and how we kind of just form and translate back to the mean, right? The mean just being the normal way of doing things. There's a reason why we just sort of converge back and we forget about these things, right? The new fad goes away, and then it'll come back. It's not that these things won't continue or anything like that, but in moderation, right? In moderation. Be smart with our money. But again, it's mostly just ideas. The other things are just ideas, comparatively. Uh, I'm gonna put my long position on for Facebook today, probably. Take advantage of the doji going into the over the weekend, earnings next week. In terms of this pullback, I'm not doing a short-term trade, so I don't really need to worry if it continues to trade downwards next week because it'll be the same price if I sell it on Monday as it is today. So on the option side, so I don't really care if it goes down another 2%. To be honest with you, I'd rather get it here for the chance that I could get some points at the start of the week. So I'm gonna take that. Again, the mega caps, I mean, they're not really. All of them are right now trades. That's what I'm trying to say. If you're not already in one, I'm still in the same Amazon position, which is, I mean, I guess a little funny, but a kind of a, a testament to the fact that this price action here doesn't make you lose value on long term. So again, I guess you can see it a little bit more on the Amazon chart that this is not trading downwards, it's trading flat. Easy to see on the underlying that it's down in points, but again, that's it. It's the all-time high. And the tickers that again are not there, they have more. This is the thing. This here, it's better than the average in the fact that it has points to gain to the all-time high still, which means that it's more likely it's going to trade on a higher and sharper velocity than the average. Right, here's the average. It came back to the average, but it's more likely that it will sharpen again to catch back up to all-time high and then turn into the average. Right now, we still have more points to gain in a shorter term. Be very interesting to see what we get for price action on this trend line here today. We've been interacting with it a lot. Again, which means algos are out there doing all the bidding. So before we take a break for lunch, I'm gonna take a break for lunch here in a minute. Let me just, for those you actually hear, let's just talk about this price action here because I know I wasn't here when it was happening, but let me put into perspective a little bit here. There's no outflow. There's actually no outflow in this moment right here. This was about an hour, right? This was about an hour of price action. There's actually no outflow in the entire hour. If you go look at like actual flow, there's like a lot of different data providers that will show if there's an inflow or outflow, right? If you actually look, there's no outflow here, which means no money left the market. What happened here? Price is moving a lot faster, right? And so in this moment, okay, bad news comes out, right? New taxes. Oh God, that's negative. So what happens in this moment? Well, you no longer go from the spread that you had. The spread widens, right? And so price is jumping a lot faster. It's not like a 1 cent spread on SPY, where if there's more than a 1 cent spread, people lose their mind, which is what happened here, right? If it's a 1 cent spread, it's going to go more like this, right? And it'll keep going and going. And that would be an outflow. If it's liquid and the price is connected, that can be an outflow. If the price is connected and it continues to sell and sell and sell, that can be an outflow. This could be an outflow. But the thing is here is that what happened was price jumped multiple times very quickly, which means we got down here a lot quicker without much selling. So let's say you wanted to sell in this moment, but the price moved down to here so quick that you never got to sell up there. Let's say you wanted to sell at 415.90 here, 415.90, but then by the time you're able to get the trade in, it's already down here to 414.20. And so then you go, oh, let me sell it. I'm going to have to fucking sell it down here at 413 then. And so that's what you do. You jump the price, right? And so it moves so quickly that it actually gets down to such a low price so fast that by the time you can sell down there, it already moves so much that people start to buy it down there. And so there's not even much of an outflow that can even happen because it happened. People were trying to lower their price by so much to try to beat the other person to get out of a position, but it ended up turning into nothing, right? It turned into, it equaled nothing, basically. It equaled the normal amount. the normal amount of buying and selling happened. It's just that the price got down here much quicker because people were jumping the prices. The spread widened by so much because of the volatility, and that was it, right? You would think there was an outflow here. No one exited long positions at all. There was no long positions exited. Didn't happen. Did not happen. These are long positions being exited over a month of time, right? Over a month of time it happens. Over a month of time. Or a rotation day. This was growth into value, November 9th. That whole day here, it was technically an outflow, but then it inflowed into a different sector. So, I mean, that was why this day is so fucking insane, is that it came out of the market. It left the market. It didn't just go from Apple to fucking X. It went from Apple to cash, and then it came back into the market. That's why you look at these, and they look the same. They kind of all look the same when you look across how wild this day is here. But it's what was so insane about that is that money fucking left. It all left the market, and then it came back in, which makes that whole thing that happened there fucking insane. You don't have any of that over here. Nothing left. It was just the spread wide got so wide that Came down quick. All right, folks. It's Friday. It's the weekend. Everyone loves Fridays. It's Green Day Friday. We wouldn't have it any other way unless you're in Bitcoin and losing money right now. Some of you are still losing money here. There's nothing wrong with that, by the way. Nothing has changed in price yet. I'll be honest with you. Nothing's changed in price yet. Just like over here I held through. Over here I held. You guys all held. Nothing has changed in price. I think the idea has changed. And I was trying to, if you guys think about it from like the last few weeks, how I've been talking about it, and I'm like, well, when am I going to get out of here? Things are moving so much quicker. Institutions are getting involved. And I was like, I'm going to have to change up my plan a little, right? You guys have heard me talk like that. So it's not like it's been a surprise. But, if we don't use some of the bias in what we think and we just look at price all the time, sometimes we'll get tricked. You'll get baited. It happens all the time with me. You can get baited by thinking you can hold through this. And there's nothing wrong with holding through it. And I have nothing wrong with Bitcoin, right? Nothing wrong with it. But I'm trying to protect myself on the downside a little bit more. And I want to sleep well at night. And I want to enjoy my fucking weekend. That's for sure. It's going to be really interesting. I'm curious. We'll see where this is at close. I'm going to come back with some closing thoughts for over the weekend, what to watch for, and what some of these bigger ideas I've talked about, what they translate into for our trading, right? Obviously, nothing's changed on the equity side. I've talked about the capital gains and shit. Maybe I'll show some of the more of the data to back up some of the ideas I just talked about earlier, but we'll do that at close. I think I said everything that needed to be said about those things, and we'll come back at close, see where things are on the equity market, see what jumped off the page a little bit. Definitely looks very good right now. I guess the question really will be if we get into all-time high, what price action we see there. And then again, at close, we're going to try to answer the question of crypto outflow, equity inflow, question mark. So that's what we'll look at close here. Enjoy your lunch, drink some water, get some exercise. Enjoy yourselves, right? It's Green Day Friday. You guys survived yesterday through a whole bunch of news that, oh boy, real scary, right? For all of you guys that make over $1 million profit a year. $1 million profit, not just revenue, profit. I don't even do that. That's, whew. I know there's a lot of you out there, some of you guys don't even pay taxes. So, get out of here. I'll see you at the afternoon, guys. See you.